Hi everyone, welcome back to another episode of KYC, Know Your Crypto. On today's episode, we're going to be discussing the inevitable bear market that will be coming whether we like it or not. The timing of discussing the current bull market and the oncoming bear market is important as Bitcoin today reached a market cap of $1 trillion for the first time in its history. While this is certainly a celebration, we should always be planning for the future. As always, anything that is discussed on this channel is not financial advice. Please continue to do your own research. Okay, welcome back to KYC. Thank you for tuning in. Before we start with the agenda, I want to say a special thanks for those people who have subscribed to the channel and have said kind things to me in the comments. And I also want to thank anyone who has watched even without subscribing. Okay, let's get into the content. In today's video, we're going to talk about the phases in crypto market cycles. We will try to also rationalize the Bitcoin and Ethereum peak prices in this bull run. And it's also a good time to discuss exit strategies. I do want to mention that I think this should be an ongoing series of videos, and every month will be a good check-in point to discuss the Bitcoin and Ethereum prices as they relate to altcoins. And it's a good time to ask you, the viewer, if you agree with my timelines in today's video. Tell me your strategies. Do you agree with my strategy and interpretation? And if you don't, of course, that's fine, but I'd like to hear your strategy. Before we get into the crux of the content, just to make sure we're all on the same page, if you're brand new to investing in general, and you don't know what a bull or a bear market is, it's very simple. A bull market is a market that is on the rise, where the economy is sound, while a bear market exists in an economy that is receding, where most stocks or investments are declining in value. A bear market can be more dangerous to invest in as many equities lose value and prices become volatile. Of course, this is a simple definition from Google. I've seen different opinions on whether or not the economy is sound right now. Some people believe that the economy is sound because there's stimulus, there's a lot of money printing that's pumping more money into the economy. And on the flip side, I've seen commentary suggesting that it is not a stable economy right now because we are in a giant bubble of sorts. Similar to other markets, cryptocurrency has bull markets, bear markets, and accumulation phases, as well as time and price, which don't always correspond to each other. And I'll explain the relationship between time and price a little bit later in the video. But first, let's focus on the bull market and how we segue to a bear market and then an accumulation phase. Some people have different interpretations of when bear markets officially start and end and when bull markets officially start and end. In my opinion, the bear market officially ends when something called the Bitcoin halving occurs. Here's a video from CoinDesk to explain what the Bitcoin halving is.
What if you took humans out of the financial equation entirely and created new money on a schedule that would last more than 100 years? It would be boring, predictable, and let people trust the system since they could make very long-term plans with confidence and without the need to worry about sudden or unexpected changes. But for Bitcoin to be valuable, it needed to be scarce, like gold. Nakamoto set the maximum number of Bitcoin to 21 million, so Bitcoin would be limited in supply, and thanks to the halvings, it would have a long, predictable, and unchangeable release rate. But how does it work? First, let's explore the process of mining. Think of it like a raffle that has one winner every 10 minutes, where miners generate a new raffle ticket for each math problem they complete and turn in. In the early days, computers weren't optimized to create these tickets, so each Bitcoin miner generated fewer raffle tickets for each contest. Anybody could use their own computer to do it, and many did. Now, in 2020, there are specialized computers to do the mining, and companies that fill enormous warehouses with these machines, in parts of the world where electricity is relatively cheap. And every 10 minutes, one lucky miner wins, and new Bitcoins are given to them as the prize. In the early days, when Bitcoin had no real value, the protocol gave away 50 Bitcoins every 10 minutes. At today's prices, that'd be worth at least $250,000, but back then it was worth less than 50 cents. As time passed, that number went down, with reward halvings every 4 years. In the first halving from 50 to 25 in 2012, the price of Bitcoin rose from $2 to about $270. In 2016, it rose to about $700 and kept increasing until the Great Bubble of 2017 and 2018. The next halving to 6.25 Bitcoin may or may not show similar performance. The halving reduces the number of Bitcoin you can win, but the number of raffle tickets entered in each contest has gone up and up. For miners, it's worth playing the game because even as the number of Bitcoin has gone down, their value on the market has risen. So then, the halving is the slow, predictable, long-term process of reducing new Bitcoin given away on the path towards eventually not needing to create any new Bitcoin at all. Over the years, we've seen competition amongst miners go up and up, which attracts even more miners eager for a payday who make the Bitcoin network even more secure. How much higher could the price go after the next halving? Really, there's no telling.
A few things the video did not mention is that Bitcoin mining will earn an individual or a company that has several miners passive income no matter what. In almost all cases, miners join mining pools like the one pictured here, where rewards are shared amongst the miners in the pool that you join. The lottery ticket metaphor from the video is if someone decides to do something called solo mining. Now, the last Bitcoin halving event took place on May 11th, 2020. Halving events occur every 4 years, so the next halving event will likely occur sometime in 2024. And when the halving event occurred on May 11th, 2020, the rewards were cut in half to 900 Bitcoin being rewarded to miners every day. And in 2024, when the next halving event occurs, there will only be 450 Bitcoin rewarded to miners every day. And you can do the math, 4 years later in 2028, there will only be 425 Bitcoin rewarded to miners each and every day. So you might be wondering, why is all of this information related to mining and the halving event so important? The answer is fairly simple. It's a case of supply and demand. Every 4 years, when there is less Bitcoin rewarded to the miners, there is essentially less new Bitcoin being mined every day. And with less new Bitcoin being generated every 4 years daily, the decrease in supply is not enough for the demand, which causes the price to increase, and that's what gives us a bull market. Given that Bitcoin is the king of crypto, it is the highest market cap cryptocurrency of them all, essentially the bull market entirely revolves around Bitcoin and what it does with respect to price action. Therefore, in my opinion, the most important factor of a bull market coming to an end is determining beforehand the peak price of Bitcoin. JP Morgan back in January predicted that Bitcoin could rise over 146,000 in the long term. And back in November, a Citibank analyst said that Bitcoin could pass $300,000 by the end of this year here in 2021. And we also have many crypto YouTubers predicting peak Bitcoin price targets within the range of $100,000 to $300,000. Here's a clip of an interview with BitBoy pictured on the right, speaking to Ivan on Tech on the left. BitBoy gives his prediction, and it's mostly due to the Bitcoin halving and other models like the stock to flow model. Here's what BitBoy had to say.
I just look at the Bitcoin cycles, and we've never had an asset that have such distinct cycles like Bitcoin has. There's a ratio where you can actually look and see that the amount of time between the bottom of the bear market and the halving, and then the halving and the top of the market are almost symmetrical. And when you work that out, a 51% time period against a 49% time period, you come up with September 28th, 2021 is the end of this bear bull market, and the beginning of the bear winter. And so I definitely do think that's going to come to pass. I do believe that we will not see as significant of a downside this time as we did last time. Instead of 85% down, which is kind of the average, I think we're looking more like 65, 70% down, because a lot of these people that are buying MicroStrategy, PayPal, Grayscale, Square, they're not selling. A lot of these big funds, they're not selling because they don't mind, hodling down 80 to 90%. They understand the rarity and the scarcity of Bitcoin. And instead of selling at the top and buying back at the bottom, they can just keep buying the whole entire time because they have that kind of money to do that. So that's kind of what I'm anticipating. I'm going to be cashing out a lot, definitely, or at least moving over to stable coins.
So looking at previous cycles, what would your top Bitcoin price prediction be? Have you looked into that?
A good number to kind of look at is $360,000. If you look at the last bull market, the new all-time high of $20,000 at that time was about 18x the previous all-time high. So if we look at 18x from $20,000, you come up with 360 grand. So my prediction is $322,000 officially, because there is some volatility with the Bitcoin cycles where you're not getting as much pop every time. At the same time, I mean, I do think of $400,000, $500,000 Bitcoin, like on a wick up maybe, is possible, just due to the fact that we've never seen such a bullish time as we are in now with the pandemic and the money printing. A lot of this is the devaluing of the dollar against the value that's increasing for Bitcoin.
This is the daily Bitcoin chart of the famous 2017 bull cycle, which peaked at around $19,800 USD. If we go back to the three phases for a moment, I will actually identify the bull market, bear market, and accumulation phase of the last cycle. Some people consider the accumulation phase as part of the bull market. I won't argue with that. On the chart, I've highlighted the time frame of when Bitcoin began to surge in 2017. I've circled the sections where significant pullbacks occurred. And note that the bull market in 2017 certainly started before September at around $1,000. But the final leg of the cycle is typically the most parabolic. And once again, the peak of the 2017 bull market for Bitcoin was December 17th, 2017, at a price of around $19,800. And while the Ethereum chart looks rather similar, Ethereum actually typically peaks about 30 days after Bitcoin does. Back in 2017, Ethereum peaked on January 10th and January 13th at a price of around $1,400. And of course, history repeated itself when Bitcoin reached a new all-time high this year on January 8th in 2021 at a price of $42,000. Ethereum almost exactly 1 month later reached its former all-time high of $1,400 on January 19th. You've probably seen this chart before, the psychology of a market cycle. This chart describes the psychology of individuals based on the sub-phases of a bull and bear market. Of course, everyone wants to ensure that they sell before or during euphoria, but predicting this time frame is extremely difficult. If we take a look at the Bitcoin chart of this current bull run, we can see that the recent pullback a few weeks ago of 30% certainly scared a few people into thinking that we were in the beginning of a bear market, which is somewhere between complacency and anxiety. Thankfully, the bull market continued and we've gone up over 95% since the pullback. But how high can we go before we actually begin to enter the bear market and accumulation phases? If we look at Google Trends for the term Bitcoin, we still have not reached our peak interest point back in 2017. Ethereum, on the other hand, is a different story, peaking recently over the last couple of weeks, as Ethereum is the number 2 crypto and still relatively new in comparison to Bitcoin. And now there seems to be institutional interest in Ethereum. As the Daily Hodl reports, Grayscale recently bought $344 million worth of Ethereum in just 2 weeks. But how do time and price relate to each other in a crypto bull cycle, specifically with Bitcoin? I like to think of these cycles in terms of progress bars, but what should be known is that time and price do not share the same progress bar. Time-wise, I think this current bull cycle is around 70 to 80% complete. That might scare some people to think we only have about 20% of time remaining. But when we look at the price completion progress bar, I think we are somewhere between 30 to 40% complete. As typically, I'll say it again, the later stages of a bull cycle are the most parabolic. As we get into some closing thoughts for the video, I have 4 questions for you. What is your Bitcoin and Ethereum peak price this bull cycle? Why are you in cryptocurrency? How long will you be in cryptocurrency? And can you follow your plan? Personally, I believe Bitcoin will peak at around $120,000 this bull cycle, with Ethereum peaking at $11,800. I am in the crypto space because I am drawn to technology and believe that Bitcoin and Ethereum, amongst a few other coins, are here to stay. And this answers my third question of how long I plan to be here, which is essentially forever. I don't see a future without cryptocurrency. To answer the last question, you must know the answers to the first three. Whether or not you plan on being in the crypto space a long time, you certainly want to protect yourself from the bear market. Some strategies in doing so are to dollar cost average out of crypto the same way you dollar cost average in during the accumulation phase. If you set a target of when you think we will be between thrill and euphoria on the psychology of a market cycle, then you must ensure that you stick to your plan of dollar cost averaging out, or simply removing a large amount of your funds into stable coins once you've met your price targets. If you're like me and you plan on being in crypto for a long time, consider keeping 10 to 30% of your investment in crypto, preferably on a cold storage wallet. I do believe Ethereum will hit $100,000 one day. Therefore, if I own, for example, 10 Ethereum, I will likely never sell 1 or 2 ETH for the chance that in 10 years we could see insane prices for ETH. If you know your Bitcoin and Ethereum peak price targets, you should know that alt season runs about 1 to 3 months after BTC and ETH peak. We've seen this in both the 2014 and 2017 bull runs. Therefore, the last question is more a matter of emotion. Can you stick to your exit plan? Of course, this is just my opinion and not financial advice. That about does it for today's video. If you like this content and want to see more, please like and subscribe. Thanks, and I'll see you in the next video.